Hi, welcome back to our third and final video on NASDAQ index options. But first, a few disclaimers. Options are very risky. They are not suitable for all investors. To learn more about options, you can read our disclosures online, as well as the OCC booklet, The Characteristics and Risks of Standardized Options, available at webull.com/disclosures. Lastly, all content in this video is for educational purposes and it's not intended to be construed as investment advice.
We left off after placing two trades in XND index options, a long put and a long call. Today we'll be checking in on the trades and closing them out. Here you can see the positions we opened within the Webull trading platform. Currently their P&Ls are showing at negative $43 for the long put and negative $24.50 for the long call. Using the chart here, you can look back to see the highs and lows of the index since we put on the trades yesterday around noontime. It looks like the market mostly traded sideways between yesterday and today, so both of our positions, unfortunately, are slightly out of the money. To close these positions, we're going to click on the Close button under the Action column, which brings up an order entry screen. For an immediate fill, I'll close these positions at the bid price with a limit order. Now, if you recall from yesterday's video, one of the Greeks that we have here in the option chain is theta, which measures time decay per day. This is slightly higher than yesterday's, but yesterday when we clocked it, it was in the 90s, which means that per day our option should have lost more than 90 cents, which is almost double the amount that we paid for it at 47 or 48 cents. So accordingly, our option price has dropped to zero. There's currently no market for this option. The theta decay has totally wiped out our premium. Now, there's a few hours left today for this option to go back into the money, but that's unlikely, and right now there's no market. So we can't close this option out. It'll sit in our account and expire at the end of the day worthless. So we've incurred the maximum loss on this trade, which was the premium that we spent to buy the option contract.
Let's go over the resulting profit and loss on the call option trade. For the call option, we paid $49 and closed it today by selling it at $22. This resulted in a loss of $27. Now, let's say we didn't close out the position before expiration. Let's say we held the 158 strike call option until 4 p.m. at the close on expiration date today, and the final index settlement value was 160. In this case, the index option trade results in what's called a cash settlement exercise. In this instance, the difference between the index settlement notional value and the strike price notional value is credited to the account. So again, let's say the index value closes at 160, which means the notional amount is 16,000. The strike price was 158, which means it has a notional value of 15,800. The difference between the two, $200, is credited to the account. All credits for cash settlement exercises will be posted to the account the following day after expiration date. You can view this in the Journal Entry tab under the Banking section of the platform.
That concludes this web series on trading an index option on the Webull trading platform. Thank you for joining us. I hope you find the information in this video useful for your investment journey. From us at Webull and NASDAQ, enjoy tech and enjoy investing.